Hello and welcome. Today is the first day of April 2020. My name is Derek. This is the Money Charts channel. All bets, trades, of the like. That's within each's own risk and their own reward. Silver, the spot price or the price on, well, we're looking at here, $13.939, $14, we'll call it. But good luck buying any physical silver anywhere near that price. As I've been stating on the channel, the premiums being so high. Not only that, but what you're able to buy, the selection, I guess, as you could say, very, very low. So all the things I've been talking about for quite some time on here about really getting into out of the dollar more than anything. I really don't know how much time we have left, or how the next wave of this cycle is going to be, because, well, I don't know how much time we have. I don't know how aggressive the markets are going to be moving coming up soon. But to me, there's still no signs that it's over or that the volatility is low. And we're just going to be back into the older times like they were. You could just daddly around, wait for different cheaper prices, because that's what this has been for so many years, with this long sideways consolidation, at least here with the silver market. Since, of course, this high. It's just a matter of time before this, of course, goes significantly higher. And I wouldn't be surprised if we go through that situation now where it's just hard to get the physical silver or the actual metal itself. And thus, will that naturally bring the prices up really big? Question mark. And we'll see in time. Of course, the general big market, we'll call this we'll say the Dow Jones anyway. We'll go with that, but it could be in a situation where it could have a serious decline. Any type of trend lines you draw connecting these levels in here, all of these lows, well, it's been taken out. I'm not going to draw any. And another way of looking at it, as far as retracement, filling empty spaces, I like to call it, we got this low, we got this high, and this low, of course, is the 2009 low of about 6,500-ish. Do we retrace any more of this? Do we come back to the 2007 highs, which coincides with the highs from in here? So 11,000, 12,000 area. And if that's the case, how will the silver market, gold markets, and all those things perform along the way? How fast would it go down if it goes down to there? Would it be just grinding its way? On the daily chart, we can see that today for the stock market, we've had some more decline, as it's in this 18 average that's sideways. So we've established resistance as far as any type of support along the way. It's really just establishing it from this low. So any movements that we go, it's already broken down below. The only real one it had about 21.4 or so, which resisted it in the open for today's session. But you can do Fibonacci from here to here. Maybe it does a 61.8%. I'd have to think that the must-hold area from here to here would be somewhere around 19.6 or so. If you see it weakness falling around below 19,000, low 19, then I think that the possibility this goes well below it is much higher. And again, on the daily chart, within the 18 average, if it goes down below this in here, excitation on here, not a good, pretty picture at all. And let's move on to the next chart, which will be that of gold, and at 1,589-ish or so. And the big volatility, but it's holding in really well so far, as it has been holding above these major lows. It retraced very close to these highs, in which it, from wherever the entire market's falling off, we can see here early March. That's when the global market sell-off has been occurring. And it really wouldn't surprise me if gold just continues to make its magnificent run, getting above here. Now we'll be talking about previous high at about 1,900. I think it's 1,910. We got here 1912 as a previous high. So low 1900 area, 1900 even, as its next potential level. Then even the 2000 psychological level as well. And then getting out above that will be entering into uncharted territory. It wouldn't surprise me, even if this year, if we do see gold prices getting like 4, 5, 6, 7,000, and normally I wouldn't be saying that for something like gold to have that kind of gain. And going back to silver, I'm not going to put up the chart to say this because I don't need to. But it's not often would I ever say, oh, is it all that relatively probable? When I say relatively probable, not 50%, but definitely not lower than 10%. Or is it greater than a 10% chance that silver can have a 10x gain? And I have to say it is greater than 10%, or in that area, and in around 1 year, maybe 14, 15 months, but its next leg higher. It wouldn't surprise me to see silver go 30, 50, 80, 100, 120, see 10, 20, $30 days. And then the equivalency of gold having breaking north of this as it's 2,400, having 2, 3, $400 days to the upside. And then having those 200, 300, 400 down days as well because of phenomenally large rates of ascent that would follow along the way. Let's move on to cryptocurrencies. But before we do that, let's take a look at the coin market cap first. And currently there are 5,290 cryptocurrencies and 20,000 markets. So market cap in at $176 billion. And we have a new one on here, ranked at number 0. We have the toilet paper token with a market cap of $85 billion, in at $164 a roll. Volume in at $41 billion. Currently, circulating supplies out of stock, up about 1,100%, and there is your price graph. Nice looking bullish chart. And Bitcoin in at 6,200. I guess the biggest gainer is the toilet paper on here. Icon up 10%. But onto the charts. Long term, it's the sideways range that it's in. 3,000 support. It's only been there once. 20,000's resistance. It's only been there once. And from the time in which it hit 3,000 for the first time, it came noticeably lower than this high, establishing resistance at around 12,000. And then it pierced above this line. I guess opposed you could say it hit it, but if you look at it here, I mean, that line is noticeably higher here. But it's been spending a lot of time within this long correctionary phase, and it's either the death move of one side or the other. Death move of cryptocurrencies, possibly, if it breaks down below. Let's not say possibly, because there's still this 1,000 previous level, and it could still be making its higher low too in here. And then the whole scare factor. Okay, key high, key lows. So maybe this would be the key low if it does this. That's some keyword maybe. But if Bitcoin goes to 0, I'm going to predict it's going to break down below this level of support. Thus, we got this level here. If this doesn't hold, if it even goes there. And then, of course, up here, this would be the death of the dollar pretty much, breaking this level of resistance. And right now, it's still in the middle part of this range. So until then, it's yada yada kind of stuff. Let's go more shorter term. And the daily chart, which is holding not as well as gold, but better than the stock market. I guess we can call it that way. And from this low, it has just been spending a significant amount of time within this correctionary phase in the 18. The 18 average of lows is starting to rise. I can't say the same thing about the 18 average of highs. And this is a very symmetrical situation as I get more short-term. Symmetrical. Higher lows, lower highs, indecision, bears versus bull battle, and it's hard to get concise, clear evidence to where things are going to be going. Let's just take a look at these highs. So we got this one here, then we got these two, really the three, break down from here. Then we made this high and then break down from here. So we have this low. We have this low, matching that. We have this low, and even this high to this high. But we're making a pattern here of really the uptrend, the downtrend, symmetricalness, and decisiveness. It's got to break it to one side or another, obviously. But until it does, it's doing what it's doing. And whether it breaks it to the upside or the downside, well, that'll give us clear indication. If it breaks it to the up, which means that it can get above this level, then we can start talking about testing some more of this area. Next level of resistance would be, just by looking at this, you can tell it's a nice little leg higher. It's a previous level of resistance. So I'd be guessing just by looking at this around 8,300. And then falling down below this level of support, we're obviously going to be looking at previous low as one of the areas. And then anything in the middle, usually decent size move, not too small, not too big. So I think on the way we'd be looking at about 4,700 if it's a break, of course, on that support. But until it does any of that, it's all to me yada yada, wait and see kind of deal. To me, it's a guarantee that the fiat currency system is backed by nothing. It's just easily for them to create and print out of thin air when need be. And we're seeing a lot of these when need be's with current situation events. And in such that the most likely events is hyperinflationary events. So for me, I'm at the stage where I am an owner of cryptocurrencies, which I hold with my private keys. I'm an owner of physical gold and silver. I'm an owner of physical fiat currency, which are really just, I'm going to say paper rectangles, but they're really not made out of paper anymore. Plastic? I don't know what they're made out of. They wash well, though, which might be a good thing with current situation. But anyway, with that being said, got some of that, and I got some of the digital dollars because we're in a stage where people might not want to accept your rectangular pieces of fill in the blanks that say numbers out of like 20s. Usually 20s is a common one. Here in Canada, they color code it. Green is 20. Blue is 5. Brown is 100. Purple is 10. Sort of like a monopoly currency. But if there's a situation where computers, banking is unable to handle credit, debit cards, then fiat currency in physical form becomes something that's a huge asset. And right now, when people don't want what you've touched in that literal sense, oh no, I don't want cash. Yeah, pay it with credit card, debit card only. Well, then you need to have your credit or debit card to pay with at that stage. So I have everything in that point, and there's going to be a lot of people, I think. It's almost an easy prediction that there's going to be a lot of people that are in good, decent financial shape right now where their investing value is if at least good 4 figures, but 5 figures or more. And they're going to be in problematic shape because they don't have gold, they don't have silver, they don't have cryptos. And, well, of course, inflation is going to be a real issue, I think, moving forward. And even if you don't believe that the dollar is going to collapse, or if you believe that gold and silver is not going to work, or cryptos are going to nothing, and that's probably a good idea to get some, because are you right 100% of the time? You have to ask yourself, and, well, what if? And by having everything, just in case Bitcoin works out, by putting what you can afford to throw away. And in situations where you normally go to sporting events or concerts, which you ain't going to right now these days, you can, one way of putting that currency in is put it into Bitcoin, put it into which other currencies, maybe swing trade, ratio trade, or try to outplay the market. And if you do that, make sure you know what you're doing, because a lot of people are going to get their ass kicked doing that, especially when they figure out how to do leverage. And then they figure out how they get their asses kicked in leverage. And, well, those are all learning experiences as well, too. But definitely ways of playing the game. And what I like about the whole crypto market, stuff like Binance and other exchanges, is you can play for very low stakes. So you can actually learn to maybe try to become a very good trader and then put in the amount that you can afford to lose. And, well, if you lose, you're just going to laugh it off and because you didn't put much in it, kind of deal. And then you can, again, learn at such a cheap experience. But a lot of people, You have cryptocurrencies, they start to do well, inflation gets out of control. You're like, hey, well, wait a second, I can sell this little bit of Bitcoin here. And well, now the costs don't, not only do the costs not seem to be so bad, but depending on how much you have in your cryptocurrency, things can get very deflationary in inflationary times. In fact, there could be a lot of people that are going to be living hyperdeflation during hyperinflationary times and having experiences within hyperdeflation, which I kind of had a little bit of it back, in course, in this time frame when Bitcoin got to 20,000, because it almost seemed like everything I was buying was pennies on the dollar kind of deal. Like, okay, I'm buying silver for 15, 25 cents an ounce based on my gains I had in trading, the amount of gains that the market had, and yep, and it's a good feeling to have. And Bitcoin prices, if they come up to this level where they go 80, 90, 100,000, it could work out. Maybe against gold and silver, it might not work out, where gold and silver move up at, I'm not going to say the same rate, because that would be pretty sick ass if gold, and it might, where Bitcoin goes up 10 times and gold goes up 10 times. And well, the ratio for gold and Bitcoin wouldn't change, but how much would the ratio of Bitcoin against other items change? And other items might inflate 50%, 100%, 20%, and 200%, 300%. And even if it goes up 5, 6, 7 times, and gold, silver, and this goes up 20, 100, 500 times, you'd be living hyperdeflationary times kind of deal. And that's all what if situations. But it's always good to go through all the what ifs and things you're doing on your scenario, both on the good side and the bad side. And that can help you understand risk reward a little bit better as well, too. Thank you for tuning in, and have yourself a great day. Bye-bye.